The market was down again today with the SPY down 2.66%, closing at 560.58. We have seen an over 8% move down from the highs back on February 19th. In addition, this sell-off has broken multiple levels of support. We've been highlighting these support levels. All of them have essentially broken. Now we're down into this 560 level. This is a pretty major support. This was previous resistance a couple of times here back in 2024. We've also got the largest gamma exposure concentration at that 560 strike. We had huge volume coming in, over 800,000 contracts on the SPY at that 560 strike, as well as the 565 and 570, over 600 and 800,000 contracts respectively at those strikes as well. So a really big day in the options market in terms of volume. We're coming into major levels of support here as identified by our lower dealer cluster zone. And one of the confirmations that we've really been looking for to see bullish momentum coming back into the market is a move back into positive gamma exposure. If you look at our historical GEX chart, we have been in negative gamma exposure since February 20th. Basically, that was the big drop, and ever since then, we have been in negative gamma exposure territory, downwards of negative 3 billion to 4 billion, which is at the extreme end of our gamma exposure range. And one of the other characteristics when you are maintaining in negative gamma exposure for an extended period, like we have been for the last 3 straight weeks, is that you will often see more and more volatility events like what we got today, where the market is down 2, 3, 4% in the broader indices. And so we do have our eye on a potential bounce, even if it's a dead cat bounce coming soon. However, we need to see a move back into positive gamma exposure territory to really get a substantial enough bounce that is both tradable and where new potential short positions could be initiated.
Thanks, Anthony. IWM has had my attention for the last few days because it was starting to show some signs that I thought were positive and might be signaling the beginning stages of a larger bounce. None of those signals have yet led to a rebound, but if you look at the GEX intensity gauge, where we compare the GEX of IWM, the gamma exposure, to readings from the last 52 weeks, you can see that we're at negative 1.8 billion. And we have this large GEX at 200, at 195, and I would say 190 is probably the last really meaningful GEX cluster. So it's very one-sided. These are conditions from which we typically do see bounces, but it's not an exact measurement. So on the chart, I zoomed out to the weekly because we've overshot the daily Keltner channel. So now I zoom out and start looking for what the next potential support or resistance target might be. And it lines up with the GEX picture pretty well. We have 190 as a big GEX cluster, like we just pointed out, and that's pretty close to this 192 lower Keltner channel. Today, you can see we had volume mostly at lower levels from where we started. So, it's still quite negative, and we're quite far away from the full moving average, which I don't like. It may imply that any bounce we do see would be an oversold bounce, and I would look to this line as a potential resistance area.
Thanks, Sean. And you mentioned piercing the daily Keltners on IWM. When I look at the Qs, and this is, of course, a 30-minute chart, but we have strongly pierced the lower Keltners on the 30-minute chart as well. And that's actually, most of the price action was below the largest gamma exposure concentration and the largest options volume, which was all situated at the 480 strike. So the Qs closing at 472.73, down nearly 4% today. So really huge move, almost a capitulation feel after this big down move that we've seen over the last couple of weeks. To me, we're seeing multiple signals indicating potential oversold territory. We are in our lower dealer cluster zone. As I mentioned, we pierced this lower Keltner channel, at least on a short-term basis. And then we're trading well below the volume and gamma exposure level here at the 480 strike. So today could have been a little bit overdone. And so I wouldn't be surprised to see some sort of at least dead cat bounce tomorrow or Wednesday. So that's going to be something I'm watching for, especially on how price reacts to this 480 level.
Yeah, the VIX is another index we keep a pretty close eye on. And last week, there were a couple of false starts for volatility to the downside that gave hope to bulls and to me. that we were going to see a larger market bounce. But really, in hindsight, these closes below the hold were never really decisive. And the next day, of course, each time we've just gapped above. So they're playing along this line, and it does show the importance of the line because of all of these breaks below and above. It looks like the VIX is being kind of steadily walked up this line. And unfortunately for market bulls, a lot of times in the past when we've seen the VIX marching higher in steady fashion, this March ends with a large spike upward to finalize the move for the VIX. I don't know if that's going to happen in this case. I mean, this could break down, I guess, if there's some reason for that to happen. But so far, we've seen GEX move higher. Last week, we noted several days where we saw elevated volume at 42.5. Well, it looks like that volume turned into meaningful GEX at 42.5. But keep in mind as well that for the VIX to reach 42.5, participants are going to have to eat through this gamma at 30 and at 35. And in a VIX spike, of course, all bets are off. That could definitely happen. I would look for 30 first and then reassess from that point. So most of the volume, though, today was actually below the current VIX level. With CPI Wednesday morning, PPI Thursday morning, there's certainly big events this week that could move the VIX in one direction or another, and we might even see the spike that is potentially awaiting the VIX to conclude this week and revert back toward the other side.
Thanks, Sean. Next, I want to take a look at Tesla. Tesla down huge today, 15.43%, last trading at 222.15. This definitely feels like a bit of a capitulation candle here after this huge move that we've seen since the middle of December. We crashed through the big 250 level. That was the largest volume in the options market, but we closed far below that at 222. I do see potential for a move down to the 200 level as we see large gamma exposure there. We also had some pretty decent volume there at that lower strike, but it looks like we also filled this gap from last October. And so we basically have approached a 50% haircut since the highs back here in the middle of December. And so I think this is safe to say that we're approaching an area where bulls are going to start stepping in and basically buying Tesla as sort of a fundamental value play down here around the 200 level. It actually starts to get interesting from a fundamental basis. If you look at the price action over the last year, anywhere from 150 to 200 has been an interesting entry point for Tesla. So that could be the case now as we are going all the way back, and this 50% drop in such a short time frame definitely feels overdone from a technical perspective. This is a name that we've been watching closely. We have not traded it in the last couple of months, but it's a name we've been watching closely for a potential play in terms of option strategy into our portfolio, which, by the way, you can follow along in our community Discord, link in the description below. And you can also become a member by heading over to geeksoffinance.com, and you'll get access to our gamma exposure dashboard and our option flow analytics tools. We are running a special as well, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots available, so you want to definitely take advantage of that while you can. We also just rolled out our algorithmic trading strategies as well, which is a new feature included in all of our memberships. And as I mentioned, I'll put a link down in the description below so you guys can check that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.